Mm-hmm. Mm-hmm. Well, you might be right, but the thing is, do not let people razzle dazzle you with complicated words, with confusing terms about PenFed credit cards. Just tell them to break it down for you. You really want to have access to the information in a clear and specific way. That's what it is. So, in today's conversation, what I want to do, I want to share with you the top 10 reasons you're not getting the high limit you deserve and need, and what to do about that. Obviously, we are talking about PenFed credit cards. Don't you go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about PenFed credit cards, the top 10 reasons you're not getting the high limit you deserve and what to do about that, okay? Number one, your PenFed internal score is low. Everybody learns about Navy Fed internal score, but the reality here is that PenFed also has a system in place where they assign you an internal score. Okay, now PenFed hasn't actually disclosed the criteria that go into that score, but based on our research and based on the fact that we ourselves, our team members, are also PenFed members, we have actually gathered a few criteria to pay attention to assign to you an internal score, and make sure that your score is as high as possible. How do you do that? Make sure that the ratio of accounts open in the last 24 months to all accounts is low. In other words, you don't want to open accounts all the time, okay? Take it easy. And the utilization of revolving account credit lines in the last 3 months must also be low. In other words, PenFed is looking at your utilization and looking at your account history in general and saying, hey, this member is using too much credit, or she or he is using more credit or less credit. Do you have limited credit experience? The more credit experience you have, the higher your PenFed internal score. Okay. What about the number of inquiries on your credit bureau reports? Those are important also. So you want to really limit your hard pulls on your credit because those affect directly your PenFed internal score. So the bottom line here is you want to elevate, you want to increase your PenFed internal score. The good thing is your PenFed internal score closely mimics your FICO score. So if you're just working on your FICO score, chances are you're going to affect positively your PenFed internal score. Okay, big decision time. I want you to talk to me. What are you going to do about that? If your PenFed internal score is low, what are you going to do about it? Talk to me about that. Do you have a plan in place to make sure that you get into the right habits? Do you have the right financial responsibility, the patterns that you need to follow to increase your PenFed internal score? Talk to me about that. Those are things you need to think about, okay? And that's going to help you. Actually, the next time you apply for a high limit credit cards from a PenFed, they're not giving you just the $1,000 or $2,000. They're giving you 10 grand. They're giving you 15 grand. Yes, sir. Yes, boss. 25 grand. That's what I'm talking about. So those are the limits you actually look for so that you can actually do the things you need to do with the cards. Number two, if you already have 5 open credit products with PenFed, you might actually find it difficult to get a high limit. Let me just break it down for you. The bottom line is that if you have too much debt with PenFed, they will now be willing to extend more credit to you. The thing here is that PenFed is looking at, they want to cover their ass, right? They're basically trying to think about exposure here. What is our exposure vis-a-vis this member? Can we actually extend them more credit? What if something happens? So PenFed, they have risk algorithms that look at a constellation of factors, and the bottom line is that they have an unwritten rules, but this is a rule that we have seen. We have tested the system many times on our research and also when we work on behalf of clients. And one thing we have seen is that if you have more than 5 open credit products with PenFed, you are going to have problems. So when we talk about credit products, you have credit cards, you have auto loans, you have mortgages, you have home equity loans, you have personal loans, you have personal lines of credit, you have student loan refinancing arrangement, and you have in-school student loans. So those are the kind of credit categories that you'll find with PenFed. So if you are trying to get a high limit credit card, but you already have auto loans, you have one auto loan, you have one mortgage, you have one personal loan, you have one personal lines of credit, and maybe two student loans, you're already above the five credit product threshold. So you want to always maintain the bar below that 5 credit products. This is important, okay? So if you already have one PenFed products or 2 PenFed credit products, you still have room to grow. But if you have 4 or 5, you want to think twice. You want to first repay one credit product before applying for a high limit credit card. Big decision time, boss. What are you going to do about that? Are you currently at the threshold? Are you currently have a 5 open credit products, or 6 or 7? Talk to me about that. First of all, you're not going to have 6 or 7 because PenFed will actually limit it, because they are thinking, again, as I was telling you, they want to limit their exposure to you, and it's important to them. And but what are you going to do about it? There are ways to do this. You can actually repay whatever credit you have right now, at least part of that credit. So you can actually pay off some personal loans before applying for a credit card. You can pay off an auto loan if you have one. If you have a home equity line of credit or a home equity loan, you can actually maybe pay it off before applying for a credit card. A lot of things you can do. The third reason why you're not getting the high limit you deserve is that you already have at least 2 PenFed credit cards. Okay, it's really important when we talk about PenFed credit cards. It's important to be strategic on the PenFed credit cards you apply for. Okay, there are mainly 4 PenFed cards, and you don't want to have too many cards open. This is important. Now, I want to walk you through the PenFed credit cards. There are 4 of them. You have the Power Cash Rewards Visa Signature, okay? This is the card that gives you a 2% cash back on all purchases if you are a PenFed Honors Advantage member. If not, you have a 1.5% cash back on all purchases. The card gives you $100 bonus statement credit when you spend $1,500 in the first 90 days. The card has no annual fee. The purchase APR goes from $14.99 to $17.99%, okay? And this card sometimes has they do have an offer for balance transfers. The thing is, this is a great card if you're looking for cash back. So be strategic on the PenFed credit card you apply for. So the Power Cash Rewards Visa Signature is great for cashback. Now you have the Gold Visa. Now Gold Visa, we have actually reviewed this card extensively on this show. It's great for if you want to do balance transfers exclusively, because the card has a low APR on purchases also. Okay, you have a $100 bonus statement credit when you spend $1,500 in the first 90 days. There's no annual fee. The purchase APR goes from 7.49 to 17.49%, and then you have a 0% promo APR on balance transfers for 15 months. Okay, this is kind of cool. But for each balance transfer that you do through PenFed, there is a 3% balance transfer fee, something that NavyFed doesn't have. But again, it depends on what you're looking for. Okay, then you have the Platinum Rewards Visa Signature. This is a card that is great for points. Okay, you have 5x points on gas paid at the pump and the EV charging stations, 3x points at the supermarket, including most Target and Walmart locations, restaurants, and TV, radio, cable, streaming services. You have 1x points on all other purchases, and we have 15,000 bonus points when you spend $1,500 in the first 90 days. And the APR goes from $13.49 to $17.99. And there's also a promo APR on this card on balance transfers for 12 months. This is really good. And the fourth card is the PenFed Pathfinder Rewards Visa Signature. This card has a 50,000 bonus points when you spend $3,000 in the first 90 days, 4x points on all travel categories for PenFed Honors Advantage members, 3x points on all travel categories, and 1.5x points on all other purchases. And the card has a $95 annual fee that's waived for existing Honors Advantage members. Okay, the purchase APR goes from $14.99 to $17.99%, and the card also has a 0% promo APR on balance transfers. What is the decision time here? What are you going to do about that? The goal is for you to get a high limit, and if you already have at least 2 PenFed credit cards, you can get a third one. They're not going to give it to you. They might give it, even if they do, the limit will be very small. So you got to think about how to reduce the line that you currently have, or just improve your credit history so you can actually get another card. In either way, in either scenario, you never want to close a PenFed credit card. This is bad for your credit score. You don't want that. And yeah, I mean, the benefits are the benefits far outweigh the whatever drawbacks you might have with having the card. So never close a PenFed credit card, or any credit card for that matter, unless they are charging you an annual fee, or they just have a horrible fees. Okay. Number 4, if you are new to the PenFed family, you might find it difficult to actually get the high limit that you need. It's important because anytime you ask for high limits, the PenFed look at a few things. Okay, they look at the length of history you have with them. If you don't have a long relationship with PenFed, this could be detrimental for your efforts, at least in the beginning. So when you ask for a high limit credit card, or you want to increase your high limit, PenFed will look at the history that you have with them. What is the length of the history? How long have you been around? Okay, if you're a newbie, if you're a new kid on the block, and you're just asking for advantages, for benefits right away, what's up with that? Take it easy. You want to establish that relationship. You want to be with them for at least 6 months, so that they know you. They see what kind of transactions you have in the accounts, what kind of products you have. Okay, what is your account standing? Okay, do you have a positive relationship with the PenFed, or a complicated one? Those are important elements. Okay, and PenFed also looks at the variety of deposit accounts you have with them. So when we talk about MPR, when we speak about multi-product relationship, we are talking strictly about deposit accounts. So we are talking about checking accounts, savings accounts, certificates of deposits, IRAs, and whatnot. This is important. And PenFed also pays attention to the size of deposit accounts. Do you have do you have sizable accounts, or you have skinny ones? And they also look at their ratio of deposit accounts versus liability accounts. It's important. So big decision time. What are you going to do about that? If you have, let's say, a recent history with PenFed, what are you going to do about it? Talk to me about it. Well, in this case, you just have to wait. You just have to build their relationship. You just have to cultivate their relationship with PenFed. Reason number 5, your current PenFed credit card's credit utilization ratio is more than 66.66%. Okay, your existing PenFed CUR is too high. So those are things that could actually limit your ability to get a high limit. So pay down your balance early. Okay, decrease your spending. You pay off your credit card balances with the personal loan if you find a better rate. So whatever you have to do to actually reduce your CUR on your PenFed credit cards, do it. And you can also ask for a credit limit increase, but this is if all your other conditions that I just mentioned are positive. For example, your PenFed internal score, this must be high. Okay, or you can open a credit card if you believe that this will help you. Okay, but the bottom line is to never close unused cards. Do not close them. So, big decision time. What are you going to do about it? If your existing PenFed CUR is too high, what is your next move, boss? Talk to me about that. Think about that. Okay, and because you got to have a plan. Because I'm giving you a formula here, but you got to have a plan to implement that formula. You need to have a plan. Let's talk about reason number 6. If your overall CUR on all open revolving credit products is more than 66.66%, you're going to have a hard time getting the limit that you need on your PenFed credit card. So before I was talking to you about your current PenFed credit card CUR, now I'm just talking to you about your overall CUR. You see, if your overall credit utilization ratio on all open revolving credit products is high, it's not good. So when we talk about revolving credit products, we are speaking about what? Credit cards, but we're also talking about lines of credit. Okay, so it's important for you to really pay attention to bring down this overall CUR. If your CUR is overall high on all credit cards and credit lines, this is not good. Okay, and there are ways to actually fix this problem, and this is important that you start fixing that, because otherwise you're never going to get the 10 grand, the 15 grand, the 20 grand limit that you deserve and need. Because that's the bottom line. We are talking about making sure that you have the limit that you need, okay? And so you need to track how much you are charging to each card. This is a great way to actually start seeing where your money is going, or where you are spending more, okay? Because the bottom line is you want to bring your CUR to below 33%, not 66%, not 50%, not 40%. No. Want to bring it down to 30 to 33% or lower, okay? This is important. And so it's important to actually set up balanced alerts. The bottom line is you can actually have that so that you know if you're getting close to that threshold that you have set for yourself. This could be a 30%, this could be a 35%, 40%, whatever it is. You have a way to track whatever you are spending and how much you are, how close you are to the threshold, okay? And you also want to find out when PenFed reports to the credit bureaus. Now, PenFed has a monthly cycle where they actually report your transaction volume, your transactions to credit bureaus, but it's important for you to actually, one thing we have seen is that if you are paying multiple times during the month, or if you are paying mid-cycle, you stand a chance to actually lowering your overall CUR. In other words, if PenFed or other credit card issuer for that matter, they want you to make a monthly payments where they just talk to you about, you have a grace period, you have 28 days, blah, blah, blah. Well, one thing you want to do is let's say your minimum balance due, your minimum payment due rather, is $100. Instead of making a one-time $100 payment, you want to make 3 payments of $33 or $35, or 2 payments of $50. Anyway, we don't advise you to just make the minimum payments. You want to make more. And if you have the means, you just want to make the full payments. That way you never have to suffer interest rates. Okay, reason number 7, folks. You are an authorized user on a problematic card. Let me break it down for you. Normally, what is an authorized user? An authorized user is a person added to a credit card account by the primary cardholder, right? So anyone can be an authorized user as long as you meet the card issuer's age requirements. For instance, the primary cardholder may choose to add their child, spouse, partner, or a close friend as an authorized user. So the whole thing here is that if you are added as an authorized user on someone else's credit cards, you trust that person, right? Not only you trust the person in terms of their personality, but you also trust that they are financially responsible, right? That's the thing here. So you are basically trying to depend on their good credit to improve your own credit. But sometimes it happens that if you are an authorized user on a problematic card, in other words, if the primary cardholder is not behaving responsibly, you are going to suffer the consequences as well. Okay, there are consequences. In other words, if they're not making payments on time, those can be your problems too, even though you're not a primary cardholder. So it's important, if you are an authorized user on somebody's card, you want to maintain a relationship with that person. You want to talk to the person frequently. If they're not your parents, if they're not your spouse, if they're just a friend or a connection, someone that you are trying to help, quote unquote help, then you really want to if the person wants to help you, then you want to stay in contact with that person, okay? You have to understand that it's, as an authorized user, the credit card account is reflected on your credit reports, which can help you make progress towards building a robust credit history. But things can go the other way around as well. So if they stop making payments, if the primary user, the primary owner of the card stops making payments, or they're having a sporadic payment history here, then things can go sour for you also. So the bottom line is be very careful about that, okay? And so big decision time. What are you going to do about that? First of all, do you even know if you are an authorized user on a problematic card? So I want you to inventory all the cards on which you are an authorized user and trying to find out if those cards are in good standing. You can contact the primary users or user and have a conversation. The whole thing is to have a conversation to make sure that there's no problem that could affect you. I'll be right back, but after this, don't go anywhere. Welcome back, folks, to another session of the Awesome Sort of Kiwi Show. We're also having a conversation about PenFed credit cards, and I'm just sharing with you the top 10 reasons why you're not getting the high limits you deserve and need, and what to do about that. Okay, and number 8. You were granted an increase less than 6 months ago. If you were granted an increase 6 months ago or less, chances are you're not going to get a high limit fast. All right, PenFed is really conservative when it comes to granting credit limits, and it's important to know how the whole thing works. Basically, when let's say you want a credit limit increase, right? You have two options of doing this. You can actually just request it formally, or you can just wait and you will receive an automatic increase. The bottom line is, either way, you're gonna have to enjoy the benefits. But if you were to wait, that's a lot better, because you're not getting a hard pull, because PenFed automatically reviews credit limits based on utilization, based on your behavior, based on your responsible or irresponsible use of the card, your financial situation, and whatnot. They look at a constellation of criteria, okay, and you can just wait, yeah. And they do this every 6 months. So if you are a new member and you just get a card, use the card responsibly, make full payments on time every month if possible. If not, make at least the minimum payment due. It's important. And so this is for the automatic increase, or you can ask formally about an increase. The thing here is that to ask for a PenFed credit card limit increase, there are ways. We have actually covered this on another show, but you need to look at your financial situation. You need to look at if something positive has happened in your financial situation. Maybe you got a new job with a higher pay, or your credit score has gone down, and you can just pick up the phone and ask PenFed to increase your limits. This is totally possible, okay? And so, but the thing is, if you were granted an increase less than 6 months ago, chances are you're not going to get the high limit that you need, if at all. So big decision time. What are you going to do about that? Just wait. Just be patient. Nothing else to do, okay? Just have to just be patient. Just wait for 6 months to pass and make sure that you have a better financial situation before applying for a limit increase. Number 9. Let's talk about reason number 9. So you have a high debt to income ratio. Yeah, this could be a detriment to your odds of being approved for a high limits PenFed credit card, okay? Remember that when we talk about debt to income ratio, we are speaking about what? The amount of income that you are spending on debt each month. But the income in the debt to income is actually the gross income, not the net income. It's the pre-tax income, okay? So it can be helpful to calculate your own DTI so you can see whether you are overborrowed. Let's say you have overborrowed, or you are okay, because that's what it is, okay? The lower your DTI, the better, because it means you don't spend much on your income when it comes to paying debt. On the other hand, a high debt to income ratio means that more of your income is spent on debt, leaving you with less money to spend on other bills or save and invest. So this is important, okay? And so you want to get into the habit of having a DTI that is around 35% or less. This is actually the sweet spot, 35% or less. You don't want to have a 50% DTI. This is just crazy, okay? And to reduce your DTI, there are ways you can do. You can actually spend less money. Yeah, this makes sense. Hello, right? You can also find ways to pay off whatever existing balance you have, or you can increase your income. Because remember, when we talk about DTI, we are speaking about the numerator, which talks about debt, and the denominator, which covers income. So either you reduce your debt or you increase your income. Okay, this is the only way, mathematically speaking, where you can just increase your DTI. So big decision time. What are you going to do about that? Talk to me, boss. Do you currently have a high DTI? Do you even know your DTI? Have you calculated your DTI? You have to. You can't sit around and just say, I don't even have an idea of my DTI. You better have an idea of your DTI, because this number will affect other aspects of your financial life and your credit life. So what are you going to do about that? Think about it. Write it down. Find strategies. Find ways to actually lower your DTI. Reason number 10, you have a low FICO score. If you have a low FICO score, there's nothing you can do about it. You just have to wait and bring it back up. If you have a low FICO score, you are seen as a risk. PenFed looks at your file and say, you know what? We don't want to actually carry that risk in our books. Or if they do, they'll probably give you a teeny weeny yellow polka dot bikini credit limits, $300, $500, $1,000. Okay, and it's important for you to start finding ways to actually work on your credit. Obviously, I'm not going to sit here and give you advice on how to improve your credit. You probably have seen gazillions of videos about the topic, but it's important to understand that there are a few things that you can do, and those are not hacks. Those are proven steps that people have tried for generations to increase their FICO score. You always need to make sure that you maintain a low balance on one or more credit cards. Don't have a high balance. If you have a high balance, this is not good. You really need to really maintain a low balance. Okay, make sure that you don't miss payments. And those are basic things, but they do have a consequential impact. If you miss a payment, you're basically hurting your credit score more because payment history accounts for 30%. Those are really important, okay? And remember that when we talk about your credit score, you have two elements that play an important role. Your payment history accounts for 35%. Your CUR accounts for 30%. Your credit utilization ratio, okay? And or some cases you might have a low FICO score because of identity theft. Those things happen. Or if you have a mixed credit file, those things could drag you down. Or you applied for a new credit recently, or let's say there is a default judgment and you don't know it. So those are little things, which goes back to what we have said on this show and on other shows. You need to check your credit report frequently, and we recommend that you do this on a monthly basis so you have an idea of what's really happening in your file. Okay, so that's the bottom line. So what you're going to do about it? Decision time. What are you going to do about it? If you have a low FICO score, do you have a strategy to bring it back up? Those are things you need to think about. Think about that and have a plan. Okay, I'm giving you the formula here, but you got to have a plan to implement that formula. All right, folks, this is it for today's conversation. I was just talking to you about the 10 reasons why you're not getting the high limits you deserve and need, and what are you going to do? And of course, we were talking about PenFed credit cards. So, reason number 1, your PenFed internal score is low. Number 2, you already have 5 open credit products with PenFed. Number 3, you already have at least 2 PenFed credit cards. Number 4, you are new to the PenFed family. Number 5, your current PenFed credit cards CUR is more than 66.66%. Number 6, your overall CUR on all open revolving credit products is more than 66.66%. Number 7, you are an authorized user on a problematic card. Okay. Number 8, you were granted an increase less than 6 months ago. Number 9, you have a high debt to income ratio. And number 10, last but not the least, you have a low FICO score. I will see you next time. Thank you so much for being here. God bless and stay marvelous.